Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look today again in New Zealand dollar. Actually, guys, today is not big difference what currency pair to watch for, because the situation was almost the same across the board. So the recent jump in United States dollar mostly was driven by the hawkish comments from the Fed, although they have held the same rate, so they haven't changed it. They have given the hint on a possible rate hike in December, and if you will take a look at the fund rate futures, you will see that the chances, the probability right now on the rate hiking in December stands approximately 50%, while before the Fed meeting the probability was approximately 30%. So almost 2 times greater probability as investors right now think on the rate hiking in December. So that's why this recent rally on the United States dollar is nothing more but just pricing in the rate hiking in December. So market just priced in the increasing chance of the increasing of the rate in December. What does it mean? It means that in December, if they will not rate the high, it will not hike the rate. Then the United States dollar probably drop. And if even they will do this United States dollar probably anyway drop, because nobody promises rate hiking cycle. So then the logical question will be, what next? So they will raise rate for once, and what to expect next? And that stands under the curtain. So what will happen? Nobody knows. And since there is no cycle of the rate hiking on the horizon, anyway will be the bearish sign for the United States dollar. But until this will happen, until December, probably dollar will feel some support from this decision and the Fed meeting and Fed comments. So that's a really simple explanation why the United States dollar has risen yesterday, just on the hawkish comments from the Fed. So what has happened on other currencies? On the euro currency, guys, you see the market has continued to move down, and by this action it has confirmed the breakout of the flag pattern that we have monitored. It means that we just need to wait for some bounce up for taking the short position on the euro currency. On the Canadian dollar market, it still stands around the same target that we have discussed 2 days ago. This market has finished, the market has dropped, Canadian dollar has dropped, I mean on the currency pair, and right now it stands on upward minor retracement, so we will see what will happen. And that's why currently it seems that discussion of the New Zealand dollar is more important, because it really has the pattern that right now stands in progress, and we need to make the update on this currency to complete our view, our analysis of what to expect and what really could happen on the Kiwi. So if you remember, yesterday we have started from the weekly chart, and here we have in progress brand body sell. So market has hit with the 1, 2, 3 closes above the 3x3. Market has hit 50% resistance right at weekly overbought and started to move down. So in fact, this brand body should start already. The target of the brand body will be the 618 support from this low to this high. At least theoretically, we will use this low. Maybe market will reach some shy target. Well, but let's initially rely on the theoretical target. So that's the pattern that stands in the core of our analysis. So this is the background. On the daily chart, we have some kind of the pattern. We did mention it yesterday, because yesterday we have discussed a bit another opportunity for trading, and I wasn't sure that's really could happen, because take a look, market yesterday hasn't confirmed yet this pattern. But today we could speak probably on the double repo sell pattern here. So take a look. Thrust up. This retracement was less than 3.8 from this thrust up. That's why we can't call it as the breaking of the thrust. So only when the market reached the significant fib level, we could say that's not good for thrusting action. But here, retracement was very small, and not even market hasn't even reached the 3.8 support. And it's upward continuation, close below the 3x3, close above. And yes, there was another close below those. Here, market has confirmed the double repo sell pattern. And this pattern is confirming let's call it as the bearish reversal and starting of the bread body sell on the weekly chart. So you can see how daily pattern starts and triggers the weekly pattern. It's downside. The target of the bread body should stand somewhere around 64.17, 64.20 area, somewhere in this level. At the same time, if you'll take a look at the forward time frame chart, you will see that market right now stands at some support. So it has completed ABCD pattern down through yesterday's drop and has reached the first fib level 66.44 area fib support. So this is some kind of the agreement, since this is the target of the ABCD that's accompanied by the fib support. This calls as agreement. And right now, probably some retracement should happen, and we should wait it for a possible take in the short position. This most logical destination of this retracement stands around 67.40 area, because this will be the conference resistance. And take a look, that is former lows, as also will provide some resistance in this area. That's why the retracement right back up to the 67.40 area seems logical and acceptable. Here we will see what we could do this, depending on maybe some patterns will be formed. On the hourly chart, guys, you also could see that the second part of this ABCD pattern is nothing more but the butterfly buying, and it's also could trigger the upward bounce. So that's been said, right now we should monitor this possible upward action, depending on what pattern will be formed here, which will trigger this upward action. Maybe market will form some kind of the ABCD pattern that will let us to confirm this area as the suitable for a possible take into short position. So that's what we'll be watching for on the New Zealand dollar. And in fact, your currency is the same, so we need to wait for some just bounce to take the short position, because recent drop and general overall situation right now supports the bearish view on the euro currency, since the conditions that we have discussed in our weekly research dedicated to the euro currency have been completed. So market has broken through the flag, and this breakout looks like was a real breakout, because market doesn't return back inside of the body, and that's why we probably should watch for opportunity for taking the short. So the same is here, but the existing of this short-term support probably will trigger some upward bounce, and that just let us to take the position at the better price.